Wait, what? Silver just dropped to $62.70 and then exploded back to $70 an hours. If you blinked, you missed one of the most insane price swings we've seen in months. This is not normal market behavior. This is pure FOMO in action, and traders are going absolutely crazy right now. Listen, silver just crossed $60 for the first time in years, and the entire precious metals market is on fire. We're seeing a massive supply squeeze with industrial demand through the roof, solar panels, EVs, electronics. Everyone needs silver, and there's not enough to go around. The deficit is real. Demand hit 1.2 billion ounces, while supply struggles at just 820 million ounces. But here's the million-dollar question. Is this rally just getting started, or are we about to see a brutal correction? Should you be buying right now or waiting on the sidelines? The volatility is insane, and timing is everything. In this video, I'm breaking down exactly what caused this massive move, the technical levels you need to watch, and whether this is your opportunity or a trap. I've got the charts, the data, and the analysis that could help you make the right decision. So smash that like button right now if you want to catch the next big move in silver before it's too late. All right, let's dive straight into what just happened, because this move is absolutely wild. And if you're in the precious metal space, or even remotely interested in commodities, you need to understand what's going on right now. So we saw silver drop down to around $62.70 earlier today. And honestly, when that happened, a lot of traders were starting to panic. People were thinking, okay, maybe this rally is done, maybe we've topped out, maybe it's time to take profits and run. But then something incredible happened. Within just a few hours, silver absolutely ripped back up and came screaming toward the $70 level. That's a massive move, and it's not just random noise in the market. This is telling us something very important about what's happening beneath the surface. Now, before we get into the technical analysis and what this means for the future, let's talk about why silver is even moving like this in the first place. You see, silver isn't just a precious metal that people buy for jewelry or investment purposes. It's actually one of the most industrially important metals on the planet right now. We're talking about solar panels, electric vehicles, 5G technology, medical equipment, water purification systems, and so much more. The green energy transition that's happening globally is absolutely devouring silver at a rate we've never seen before. Every single solar panel that gets installed uses silver. Every electric vehicle that rolls off the production line uses significantly more silver than a traditional combustion engine vehicle. The demand side of this equation is going absolutely parabolic. But here's where it gets really interesting. While demand is skyrocketing, the supply side is struggling to keep up. Mining production has been relatively flat for years now. You can't just snap your fingers and open up a new silver mine. It takes years of exploration, permitting, construction, and development before a new mine can start producing. And even existing mines are dealing with declining ore grades, which means they have to dig up more rock to get the same amount of silver. Operating costs are going up, environmental regulations are getting stricter, and in many cases, silver is actually a byproduct of other mining operations like copper or zinc, which means silver production is tied to the economics of those other metals. So what we're looking at right now is a classic supply and demand imbalance that's getting worse every single year. The Silver Institute has reported that we're facing a structural deficit, where industrial demand alone is exceeding total mine supply. When you add in investment demand from people buying physical silver, silver ETFs, and futures contracts, the deficit becomes even more severe. This is the kind of fundamental backdrop that can support much higher prices over the long term. But the question everyone's asking right now is whether this particular rally can continue or if we're due for a pullback. Let's talk about what happened today specifically, because the price action is really telling. When silver dropped to that 62.70 level, it hit a key support zone that a lot of technical traders were watching. This wasn't just a random number, it was a level where buyers had previously stepped in, and it represented a Fibonacci retracement level from the recent rally. What we saw was a classic test of support, and the market passed that test with flying colors. The buyers came rushing back in with such force that it triggered what's called a short squeeze. You see, a lot of traders had been betting against silver, thinking the rally was overdone. They had taken short positions, meaning they were hoping to profit from falling prices. But when those short sellers saw silver bounce so aggressively off that support level, they panicked and had to buy back their positions to cut their losses. That buying pressure from short covering added fuel to the fire and helped push prices back up toward $70. This is where the FOMO psychology really kicks in. Fear of missing out is one of the most powerful forces in financial markets. When people see a market making a big move, they don't want to be left on the sidelines. They see their friends making money. They see headlines about silver surging, and they think they need to get in right now before it's too late. That rush of buying creates momentum, and momentum can feed on itself in a virtuous cycle that pushes prices even higher. But here's the thing about FOMO-driven rallies. They can be explosive to the upside, but they can also lead to equally sharp corrections when sentiment suddenly shifts. That's why understanding the underlying fundamentals and the technical picture is so important. From a technical standpoint, silver breaking above $60 was a huge deal. That level had acted as resistance multiple times over the past few years. And when we finally broke through it decisively, it signaled that we might be entering a new bull phase. The move from 60 to 70 happened incredibly fast, which shows you just how much pent-up demand there was waiting on the sidelines. But now that we're approaching 70, we need to watch for potential resistance at this level. 70 is a big psychological number, and there are probably a lot of traders who have placed sell orders around that level to take profits. We could see some consolidation or even a pullback from here as the market digests these gains. However, if silver can break through 70 and hold above it, the next target could be significantly higher. Some analysts are talking about $80, $90, or even triple digits if this bull market really gets going. The historical precedent is there. Back in 1980, silver briefly touched $50 during the Hunt Brothers episode. And in 2011, it reached nearly $50 again during the last major precious metals bull market. Adjusted for inflation, those levels would be much higher in today's dollars, which suggests that silver still has a lot of room to run if the fundamental story continues to play out. Now, let's talk about what's driving institutional interest in silver right now, because it's not just retail traders piling in. Big money is starting to pay attention too. Central banks around the world have been buying gold aggressively as they try to diversify away from the US dollar and hedge against inflation and geopolitical risk. While silver doesn't play the same role as gold in central bank reserves, institutional investors are increasingly viewing it as an attractive alternative that offers both the safe haven characteristics of a precious metal and the growth potential tied to industrial demand. Major investment funds, family offices, and even some corporate treasuries are allocating capital to silver as part of their portfolio diversification strategies. There's also a growing retail investment movement around silver that has been building momentum over the past few years. You might remember the Wall Street bets community trying to squeeze silver back in 2021. While that particular effort didn't play out exactly as planned, it did bring a lot of new attention to the silver market and highlighted some of the structural issues around supply constraints and the way silver is traded in futures markets. The physical silver market is relatively small compared to the paper market where futures and options trade, and that disconnect can create opportunities for significant price moves when physical demand surges. Speaking of physical demand, let's talk about what's happening at the retail level, because this is really fascinating. Dealers who sell silver coins and bars are reporting that inventory is tight and premiums over spot price are elevated. When you go to buy physical silver right now, you're not just paying the spot price you see quoted on financial websites. You're paying a premium on top of that to cover the dealer's costs and profit margin, and those premiums have been running higher than normal. This tells us that real physical demand from individuals who want to hold silver in their hands is strong. People are buying silver eagles, maple leafs, bars, and rounds at a pace that's straining the retail distribution system. This physical tightness matters because it reinforces the fundamental supply deficit story. It's one thing to talk about supply and demand numbers on a spreadsheet, but when you can actually see it playing out in the real world with dealers struggling to keep inventory in stock, it makes the thesis much more tangible and credible. And this physical demand isn't just coming from investors looking to make a profit. There's also a segment of buyers who view silver as insurance against currency devaluation and economic uncertainty. These people are accumulating silver as a long-term store of value, and they're not going to be easily shaken out by short-term price volatility. So where does all of this leave us right now? We've got a market that's being driven by powerful fundamental forces on both the supply and demand side. We've got technical momentum that's attracting more and more buyers. We've got institutional interest starting to build, and we've got retail enthusiasm that's creating FOMO and driving physical purchases. All of these factors together create a very interesting setup for silver, but they also create risk, because when sentiment gets too one-sided, markets have a tendency to correct sharply before resuming their trends. If you're thinking about getting involved in silver, either as a trader or as a long-term investor, you need to have a plan. Don't just chase the price higher because everyone else is doing it. Think about what your time horizon is, what your risk tolerance is, and what percentage of your portfolio you're comfortable allocating to a volatile asset like silver. Some people prefer to buy physical metal and hold it for the long term. Others prefer to trade silver futures or options for more leverage and flexibility. Still, others might choose silver mining stocks or ETFs as a way to get exposure. Each approach has its own advantages and risks, and the right choice depends on your individual circumstances and goals. One thing I want to emphasize is that while the long-term outlook for silver looks very compelling based on the fundamental supply and demand dynamics, the path from here to much higher prices is probably not going to be a straight line. We're going to see volatility, we're going to see corrections, and we're going to see periods where it feels like the rally is over. That's just the nature of commodity markets. They move in waves, and the key to success is being able to hold through the inevitable pullbacks if you believe in the long-term thesis. The worst thing you can do is buy high during a FOMO rally and then panic sell at the bottom of the next correction. That's how people lose money, even in bull markets. Looking ahead to the next few days and weeks, I'll be watching several key levels very closely. First, can silver break cleanly above $70 and hold it as support? If it can, that would be very bullish and could trigger another leg higher. Second, how does silver perform relative to gold? The gold to silver ratio has been coming down, which means silver has been outperforming gold, and if that continues, it suggests that the industrial demand story is really resonating with investors. Third, what's happening with the US dollar and real interest rates? Silver, like gold, tends to do well when the dollar is weak and when real interest rates are low or negative. If we see the dollar continue to weaken, or if bond yields stay relatively low, that should provide a favorable backdrop for precious metals. I also want to keep an eye on any news coming out of major silver-producing countries and any developments in the green energy space that could impact silver demand. Government policies around solar energy, electric vehicle adoption, and infrastructure spending can all have significant implications for silver consumption. And on the supply side, any disruptions at major mines due to labor issues, political instability, or operational problems could further tighten the market and support higher prices. The bottom line is this: what we witnessed today with silver dropping to 62.70 and then rocketing back towards 70 is not just noise. It's a reflection of a market that is in the early stages of what could be a major bull run driven by real fundamental factors. The supply deficit is real, the industrial demand growth is real, and the investment interest is building. But with that opportunity comes volatility and risk, and you need to approach this market with your eyes wide open and a solid plan in place. Don't let FOMO drive your decisions, but also don't ignore what's clearly a significant shift happening in the silver market. This is one of those moments where being informed and prepared can make a real difference in your investment outcomes. And I hope this video has given you some valuable insights to help you navigate what's happening right now.